So welcome back to Everything Marketplaces, where we talk with the founders and leaders from some of today's top marketplaces. So this is episode 128, which is a really great group chat that we just had with Milo, who's the CEO of Fibo. So Fibo is a marketplace that's helping making investing in real estate more accessible and is leveraging blockchain to do so. So Udi was also previously in product and growth roles at companies like Pinterest, Lyft, and Tinder. So he has some real incredible experience when it comes to both product and growth for marketplaces. So this is a really great chat with Udi, where we got to learn more about his really great product and growth experience, some unique insights, learnings, how he's more recently taken the leap to become a founder and starting Fibo, more about it as a marketplace, and also had a great group Q&A. So I really enjoyed this conversation. Now you're going to find it a great watch to the end. So Udi, welcome to the group chat. And, you have some really great product and growth experience at companies like Pinterest, Lyft, and Tinder before going on to start a really cool marketplace, with Fibo recently. So I'm really excited to, have you join us here today. And like to start off with saying, huge thanks for taking the time to do so in advance. So before we really dive into things, I think it might be great if you can start off by sharing a little bit more about your background, though, for those that don't know you.
Yeah, definitely. First of all, this is an awesome community. So thank you for having me and welcoming me in. I was ready. Came to the States like 13 years ago, which is yesterday, but I'm old. Spent years in business school at NYU. Got a kid and a diploma the same day, and then moved to the Bay Area. So spent the last 10 years doing product growth in marketplace companies. So first 3 years spent at LinkedIn, jobs marketplace, build all kind of stuff that I'm hoping you're still using. Spent a year at Pinterest. I ran home feed recommendation engine machine learning team over there for a year. And then decided that I needed something slightly different. Met the then new head of growth at Lyft. Spent about an hour over the phone with him, and we're like, okay, gotta do it. Picked up the supply side of the business, and so I ran supply growth. 6 months later, also demand growth, and then marketplace growth. 2016 to 2019, quadrupled the business, doubled market share, IPO the company. Unfortunately, now they're not doing really well. We can talk about that if you want. And then just when COVID hit, decided that I need something else. So spent 2 years at Tinder as the VP of Product Growth and Revenue, which is essentially all of Tinder except trust and safety, which you don't want to do. And my good friend Rory did trust and safety. Thank God he did it. Got the company through COVID from 1.4 to $1.75 billion in revenue. And we can talk a lot about 20-year-olds dating during COVID. Do not worry, the human race is safe. They do not stop.
Yeah, there's so much we can jump into here. So let's maybe kind of go back to some of your time early on at Pinterest, and kind of then maybe jumping into Lyft there. But what were you working on at the time, and what were some of the kind of unique challenges maybe?
So I joined in, and one of the things that we were in the middle of going international, so that was a big challenge and like a big unlock for the company back then. We started seeing like good improvements. I wasn't 100% on that. That was more of a growth team. But one of the key challenges was, again, like how do you solve the bootstrapping problem, right? Like you want to focus, let's say, on Croatia. Or like, I don't have Croatian content. I don't have Croatian users. How do I get it? How do I understand what's going on? And so we were working on supporting a lot of that on the machine learning side of the business. And then one thing that I wanted to do specifically was grow the TAM beyond just women. And so I'm sure you're using, I don't know if you're using Pinterest, but if you are, it's mostly for women. And so one of the things I explored for about a quarter was Pinterest for men. Like, how would something like that look like? And what would we do? After 3 months of understanding what men do on Pinterest and look for, the decision was, we will never do that. And so that's like in a very short summary of some of the challenges.
Yeah, no, that's super interesting. So, kind of segueing into to your time period at Lyft, could you walk us through that in a little bit more detail?
Yeah, for sure. So I joined Lyft was a $5 billion private company. This is end of 2016. Just like a couple months before the best growth hacker in the world, Travis Kalanick, just went on a rampage and like made the business so much better. And so if you remember like the lead Uber beginning of 2017, I came in, um, we were struggling, and we can talk about why in a second, to grow the business. But then like Uber just made like consistent mistakes, and that actually allowed us to cross the chasm. We'll define it in a second. And after that, it was just up and to the right. And so a couple of challenges. One was 2016 Lyft was an ops-driven company. One of the challenges we needed to do is move it to being like a math and product-driven company. And so everything was on via spreadsheets. You would like decide on how to invest and where to invest and which markets to grow. And the process itself was very, very difficult. It was just like exceptionally slow. And from a math perspective, wasn't sound enough, based on at least how I ran businesses before. And so the biggest challenges for us in the first year was like restructuring culture. And in doing that, essentially like shifting a lot of the value creation from the ops team, which was driving the business, to the growth team, which wanted to drive the business. And so you could imagine that if you're the COO and this idiot comes to you and be like, I know math better than you, and I also do code better than you, and I can run this business better than you, he wouldn't be super excited. And so that's not what I said, but it was, it became clear like over a very short period of time that solving marketplace problems specifically on the ride sharing side is a very complex math problem, and it is not an ops issue. And so computers are really good at solving like very complex math problems. The humans are not. And so that was definitely one of the issues that we struggled with, and we essentially, I think, Lyft did a phenomenal job 2017, 2018 in solving that. We restructured the business, moved almost all of the important decision making into a centralized location in HQ, driven by data science, product, and growth people. We centralized a lot of the decision-making processes, and were able to make investment decisions on a national level. And so I'll give an example. Every week, I would have a budget of a few $1 million. I ran about $500 million budget a year. And so you needed to invest that money. The way to invest that money is to look at every market, see where it is today, see where you want to take it strategically, understand if it's imbalanced, and if so, how, and then understand on the margin what's the best investment strategy for that market, and then go and invest in that. And so what we wanted to do was say, I have $1 million next week, where should I put it? Should I give it as a coupon to a rider in LA? Should I give it as a bonus to a driver in Seattle? Should I like give it as a referral bonus to a new driver in Oakland? I don't know. But we needed one system to do like a global optimum for this. And as you can imagine, like no human can actually do this. And so it took 2 years, but we actually built it, and it worked. And the first time we launched it, it was running on the cloud, and it took like 4 days to compile the model. 6 months later, it ran from my laptop, and it took like an hour. And so we can definitely go into learnings if you're interested in how one might achieve that.
No, that's really great. Yeah, I would actually love to dig into that a little bit more with some of the learnings, kind of looking back now, but also too maybe for a little bit of context. What sense of scale were you at?
Yeah, so Lyft back then was US only. We launched during 2017. We launched the entire US. So we were almost everywhere. There was a big push H1 of 2017, if I remember correctly, or H2. To be like completely everywhere. So we launched 150 new markets with like 4 months. In every new market is super painful because ride sharing is a hyper local business. And so you have to bootstrap the entire market. Lots of ops stuff. I think we were doing like millions of rides a day. And during 2017, which was frightening and fun, I think the business was growing on an average 3% week over week for 52 weeks straight. Like I've never been in something like that. This is unheard of. And everything broke all the time. Every code broke. Every database broke. Every way to run the business that worked a year ago broke. Everything. We consistently like had to like rethink how we do the business while growing 3% every week, and like we couldn't stop.
That's super interesting. Yes. So I guess that, kind of looking back now, what do you think you did exceptionally well at Lyft?
So one of the things that we wanted to do was we wanted to move decision making from humans on the ops side to data scientists and machine learning algorithms on the growth side. But when we joined, like all the P&L and all the responsibility were sitting with the ops team. And so I needed to convince them to trust my model. And so I went to them and I'm like, hey, I built a model. I can forecast next week. I can give you like better estimations on whom to spend the money on and who to give it to on a local basis, on a city basis. And so I would go to city managers who would own the P&L, and none of them wanted to play with me. Like they were like, I don't trust you. You're new. You sound smart, but what? And the reason is because they had nothing to gain. And so they were essentially paid to run their business kind of okay, don't take too much risk, and just hit your numbers and be quiet. And then somebody like me comes in and be like, oh, I can help you like save some time and be slightly better than all of your other general managers, but the risk is really high for them because they don't know and they might miss on the end of year bonus. And you don't want to do that as an ops person because it's a meaningful chunk of your pay. And so I had like a couple of like really smart and future looking friends on the ops side who said like, yeah, let's do it, but nobody else would play. And so I sat down with my team and we tried to figure out how to break through it. And one of the things we thought about was like the incentives are completely misaligned. We're asking them to take so much risk on something that I'm building, and I have no skin in the game. And so we flipped it. And essentially I went to London, the CEO then, and we said, and the CFO to Brian, and we're like, I need something like $15 million from you guys to put in a fund called the Growth Fund. And they're like, oh, what are you going to do with it? You're going to grow the business? I'm like, no, I'm going to do everything but grow the business. They were like, what? And I'm like, I'm going to build an insurance program. They're like, what do you mean? And I told them, I'm going to offer my product to these GMs, to the general managers, and I'm going to claim that if they use me, will increase their revenue and growth by 2% next week. And that will translate to $50,000 in incremental revenue for them, or 100,000 or $1 million, doesn't matter which city. If I win and they get the growth, they keep the money. Their P&L better. But if I lose and I missed my goal, I cover them from my insurance fund. And they're like, oh, that makes sense. Take the money, you go. And so I had like money that nobody could touch and everybody wanted a piece of it. And so 2 weeks later, every single GM wanted to play with me because they had like zero risk exposure. And we were running like, it saved me about a year in how to like scale what we wanted, and I get the models everywhere and get the data. And so tip, figure out who your users are and don't be shy about like aligning incentives in ways that work for them.
That's a really interesting story about it's always interesting to hear from some of the ops driven marketplaces and larger orgs. So so transitioning into Tinder, what led you to joining the Tinder team, and could you maybe kind of take us through your experience there?
Yeah, sure. So 3 years into Lyft, it was just like brutal. It's like running Lyft is it's so hard. Like every day something happens, every week something changes. They're like, oh, I got the best plan for next week. And then everything crashes because there's like snow somewhere or Uber did something or whatever. And after 3 years, it was hard. And then a headhunter pinged me. And I remember I was outside in my backyard and my wife was like, who did you talk to? With like, it's Tinder. They're like, no, you're not going to Tinder. I'm like, why? It's like, no, veto, not enough. And so we had a conversation about that. She was like, yeah, they treat women really poorly. And so I was like, okay, I'm going to LA. I'm going to meet with the team. And I'm going to come back with a written report how they treat women. And if you agree that it's fine, and I agree it's fine, I can take that job. She'd be like, cool. And so part of me going to interview there was I need to talk to your justice safety person for like 2 hours. And he became my friend. And afterwards, they were like, this was the weirdest interview I've ever had. And after, like, I came back with the list, and my wife was like, okay, fine. They're investing like a lot of money, and they're really serious about this. And the people they put in charge is like very, very good. And so I joined mostly for like the challenge of the marketplace and for the CEO back then. Another tip is like always find mentors, and I was very lucky to have a few. And Andy, who hired me back then, is still a very good friend of mine. So we had an exchange of values where he teaches me how to run a public company, and I teaches him how to think of a product. And so I joined there. This is again beginning of COVID. Crazy to run Tinder through COVID again, right? Like if you remember Q1 of 2020, this is like Italy with like clothes and like banging on stuff. Everybody's afraid we're all gonna die. All of our numbers tanked, like globally within a month, like 30%. Everything just crashed. And one of the things that like I was very fortunate to notice early on was like that there is a pandemic, like not in like March. This is like in like January. Like this is going to be huge, and B, this is an opportunity. And so when I came into Tinder, one of the things that was very obvious is like their tech debt was insane. It was like very, very hard to operate. They haven't touched a lot of the product for a very long time, and their ability to like just think clearly about what needs to be done in 6 months because everything was burning. Because when you have so much debt, you're constantly in the present. There was so much opportunity, and then COVID came, and I was like, best opportunity ever. And they were like, the CEO was like, what are you talking about? I'm like, dude, for the first time in a very long time, Tinder doesn't need to hit its quarterly goals from public markets. They were like, what do you mean? Why? I'm like, because everybody's going to say it's COVID. The entire market's going to say COVID made us miss. So let's not even try and hit the market, the goals. And I'm like, okay, what do you want to do instead? And I'm like, I want to gut the entire system and like rebuild from bottoms up, spend 6 months doing infrastructure. And he was like, I brought you to do growth. I'm like, yes. But we're going to do growth like in the right way. And so when COVID finishes, you're going to see us go vertical because we just spent 6 months killing all of our techniques. And they were like, okay. But like we had an agreement where we don't actually tell anybody that we did it, but we just did it. And so for the next 2 quarters, the entire market said COVID. Everybody missed. It was fine. And then when people couldn't take COVID anymore, like Tinder actually exploded. And the reason was we spent like 6 months building and shipping like very, very like high quality products, and we just gated them like really nicely towards like the end of COVID. And so you saw like a lot of improvements on infrastructure, on velocity, on learning, on executing on the market. So yeah, again, we just went vertical.
Yeah, no, I mean, that's a really great point. First off, as far as following kind of talent, right? And yeah, you mentioned you joined for some of the challenges, and it sounds like there are quite a few. So when it comes to you mentioned as far as kind of like rebuilding some of the infrastructure and kind of tech debt. So what were some examples, maybe how you thought about that, and then you mentioned shipping some kind of features and functionality that led to growth kind of coming out of the pandemic. So could you maybe share a few examples of that?
Couple things. So number one, like all of us like marketplaces. It's the worst type of product to ever build. It's so hard. It's like you don't measurement doesn't work. A/B testing do not work. Like scaling this business is really hard. Everything is recursive, right? Like if I do this, my supply is going to do this, my demand is going to do this, regular is going to say this, and then my competition is going to do this, and then it fucked up my demand from the beginning, and I have to start over. Like nothing works. And so what matters the most in marketplaces are only 2 things: network effects and velocity. And so if you're building a marketplace that has network effects, and Tinder, thank God, have that. We can talk about why in a second, but like really, really have like a very strong network effect from a math perspective. It's easily proven. Velocity to me was like the thing that every single founder executive leader needs to work on. And so the definition of velocity to me is like, how quickly can we get to insight? So what I measure when I work with my teams is time to insight. And time to insight is something that goes somewhere between I have an idea or a thesis or a statement, and it has to be factual, and I can disprove this statement. Like, how long does it take you to do that? And if I can shorten that time, that means I can run like many of these statements through the system. I increase the rate in which I learn. And so nothing else kind of matters. Like, I don't need to be first to market, I'm faster. And I don't need to be the smarter, I'm faster. I don't need to like have like the most intuitive, the nothing matters because I can catch up faster than anybody else, and everybody else is doing A/B testing for me. And so we played the same strategy with Lyft and Uber. Like, one of the things I didn't do was innovate for the first year at Lyft. We're like, no, Uber is innovating. We just clone the things that work. Like, we're second. So we focused a lot on velocity. And so the easiest thing to measure is number of experiments per quarter. So what I ran the team on is like, you prove to me, and like all teams, especially like the data team, infrastructure team, like A/B testing team, we're like, all of you need to like 10x the number of experiments you run per quarter. And if you're able to do that, like, we're going to be good. Don't worry about it. You're going to be paid because you're smart. You're just like unable to do these things really fast. So let's unlock you and see how you do. And it almost always works. And so the biggest challenge for me was like, how do I make sure that the team is just like really efficient? And again, we weren't even focusing on, do you have like the most insights into the super complex world of dating? I'm like, even the basic insights, multiply that on a $1.5 billion company, they're going to work. Don't worry about it. You're going to be able to generate another $10 million somewhere. Change the color of the button, you'll find. So it was more on like the infrastructure and like long-term capabilities. Does this help?
Yeah, no, this is super interesting. I feel like we could go pretty deep on it. So, I did definitely want to get over to, jump into your experience with Fibo for a little bit though. So we'll kind of, transition over. So what led you? I guess what was the founding story for Fibo?
Yeah, so after like 10 years and like getting to be an executive, which is the easiest job of them all, after like actually building stuff, because I just have to tell people what to do, and getting paid the most, I decided to go back to like getting paid the least and doing the most amount of work. Why not? And so it goes back to COVID. I saw that like then Trump administration like just printed or minted $4 trillion, told my wife, you know what's coming, like a massive asset bubble is coming. So the only thing you could do is like, let's go buy like real estate with leverage. Why not? Because the US dollar is gonna crater. So we did it, and we bought a couple of properties, and it was terrible. From a marketplace perspective, like investing in real estate is the opposite of what all of us like. The market is illiquid, price discovery is shitty, like fees are high, and you need a lot of expertise to A, understand, buy, find the asset, and B, manage the asset. So it's just terrible. And we were talking about like, how can you make it better? And we're like, okay, what's the features of a really good marketplace? Like the stock market, like easy to find. There's a list. It's liquid. You can enter with as little as $10. You can exit whenever you want. Transaction fees are 0 or close to it. And there's a lot of price discovery happening all the time. We're like, what if the US investment market looks like that? And so that's what we're building in Fibo. Essentially, we're building a new capital markets for small and medium-sized real estate investors. So the larger ones, the REITs, fine, go to the New York Stock Exchange. And we're taking properties or funds, we're fractionalizing them into shares, and we're building a liquid marketplace where people can actually transact in that. And so if you want to invest $1,000, you can go to Fibo Finance. And we have only 5 properties because we just started 30 days ago, but you can go in, put as little as $100. If you have $500, diversify your portfolio. And that's the value prop. The last thing is, because it's not hard enough to launch like a marketplace with real estate, everything is built on the blockchain. And so one of the things we want to do is make sure that today's financial intermediaries are gone because they take away our money. And I hate it when they do that. And so we've replaced some, but not all, but hopefully more and more as time goes by, intermediary by like using the blockchain as a code. And so when you transact with us, you don't need a clearing broker. And because we don't need that, we don't pay 2% fee that you would have paid on your investments. And so you get to keep more of your money and they can go away. And we have replaced these opaque and old school establishments with transparent code.
Congrats on the launch, by the way. So I've been following along, and it's been super interesting to see. So kind of going back, to the very beginning, which of course, kind of still in the earlier stages. But what were like the first steps that you actually kind of took to start it?
I'm fortunate and very lucky because of my last 10 years. I have a network of both like really good operators and people with money. And so the first thing I did was reach out to a few of my mentors and when I'm leaving. And one of them, Ellie from Tinder, was like, I have somebody who's like you, but actually can build shit because you cannot. I'm like, oh, great. And so he introduced me to Mike, my co-founder. He was the CTO of OkCupid before he joined with me. And so first thing was like, I cannot do this alone. So it was like finding a couple of advisors and a co-founder. Second was we spent about a month like just honing through exactly what we want to build. And third was going after money. And so one of the things we knew we didn't want, like, we're all the kids. I cannot do like a ramen style bootstrapping. I live in New York City. Like I'm going to live in a cardboard box if I do that. And so it was very clear for us that like we want to get funded before. And so I did like a very, again, fortunate and lucky run at the beginning of 2021 before everything went downhill. And we're able to collect a few $1 million from founders I used to work with and people I advised and friends and a couple of VCs. Today, there's no way I could have done it. But like a year and a half ago, it was like great. And I think the next set was I spent a lot of time doing two things. One, talking to as many suppliers as possible, because I spent the last decade talking on the consumer side and I roughly knew what I wanted to do, but on the supply side, I didn't know. But talked to a lot of them about their issues and their problems. And then spent a lot of time like writing. I'm a strong believer in writing. And so I spent a lot of time like writing the plan and how we think about the marketplace. And why we're going after this type of supply and this type of demand, and why we're doing it right now, and where essentially we want to end up. Because what we're going after today and where we want to end up are two very different things. And so it was very important for me to show like why we're going after what we're going.
So I guess you mentioned as far as like writing, thinking about Fibo as a marketplace right now and then kind of the future. So how would you kind of describe it or maybe even break it down from a marketplace kind of level?
Yeah. So another insight that I always tell my team is like start where you want to finish. So tell me where you want to be in 10 years. And if you work with corporate, like one of the things you hear a lot is like, I'm going to test myself into it or I'm going to experiment. I don't really know what's going to happen. I'm like, no, that's like super lazy. Have a perspective of what's going to happen and be wrong. That's fine, but don't ever like launch something that like I don't know. No, what? And so for us, it was like very clear to describe what it is we're building. And so personally, like, and it's gonna sound ridiculous. We'll see in 10 years or less if we fail. We want to build the world's like largest stock exchange. Like the US real estate asset class is $70 trillion. It's larger than the S&P. And so we want to put all of it inside like a public efficient market, or at least a few trillions if we can, we'll see. But to do that, you need to convince like Goldman Sachs' private wealth management fund to participate. That will take 7 years. And they will only come in with a check of $100 million. So I need assets that can absorb $100 million. And they will only come in if I have demand. With that, they will only come in if I have supply. And so if you play this game all the way down, you'll be like, oh, I'm left with single family homes and retail. And And why? Because that's the easiest asset class to understand and the lowest barrier to entry on the supply side. And the least sophisticated, most risky investor type. We're going after sophisticated retail investors, and we're going after like fairly simple supply.
That's really helpful. I guess on the supply side too, is it just to learn a little bit more about it? So are you actually, buying the properties or to kind of build your first supply?
So for now, yes, we bought the first 5 properties, and the reason is I didn't want to take anybody else's money and risk it before we take our own. So we used our equity funds. Not sure it's the smartest, most capital efficient way of doing it. It was just the fastest. But our vision is running an exchange, like not running a REIT. And so if you think about it, like the New York Stock Exchange does not own IBM, right? It's an exchange. And so that's where we want to go, where we attract third-party operators and investors, and we broker the deal between the two. So we introduce them and allow them to exchange funds and securities. To do that, we embarked on a horrible journey that I do not recommend any of you do, and are on a path to get a broker-dealer ATS license from FINRA and the SEC. It's been a year. It's terrible. It's the opposite of fun. I'm going through exams and like hundreds of thousands of dollars of investments in legal fees, thousands of man hours, person hours, not just me. It's horrible, but I keep on telling myself it's a moat, so we'll see. Like nobody should go through this after we do it. It's so hard. But after we do it, we get a license to like broker security deals.
Yeah, no, I'm glad you mentioned the regulatory challenges. So that was something I was going to ask about. So, seems like from your past experience as far as like with Lyft and I would say like operationally intensive marketplaces and some kind of regulatory challenges, and now with Fibo too. So
yeah, it's all the legal stuff is fairly new, and we've been like ramping up on this and learning as much as we can. It's an exceptionally complex world where all of us we have like zero power and control over our destiny when it comes to like how regulators are going to look at it. And so it's a humbling experience working through this, especially because like some of the stuff we do, they don't understand. And so it's kind of weird to have conversations with people that has opinions about things they don't fundamentally understand, yet they hold all the keys.
Yeah, certainly. So that's actually a really good segue probably into blockchain, right? And kind of thinking about when it comes to how you're actually enabling this and the kind of technology behind it as a marketplace. And one that comes up a lot here in the community, but we don't talk about as much as maybe we should. So how did you kind of think about I would say from the very beginning leveraging blockchain, and then we can kind of go into a little bit more specifically as far as why you selected a Polygon.
So one of the conversation Mike and I had very early on was around what are some values in capital markets that we like and appreciate. And two came in really, really strong, which is security and transparency. And we thought that we're like, do we have security today? Yeah, we've got two-factor authentication, but you hear about accounts being hacked and spoofed and all that. And we're like, can we enhance that? And then on the transparency side, again, going through like COVID stuff, GameStop and all the stuff that's happening, SVB right now with the banks, FTX, like the thing you see consistently are like two failures. One, people just say, trust me. I'll take your money and you should trust me. And two is there is complete opaqueness about like where the funds are actually held, who's holding them, and why. And so we're like, can we build a fully transparent marketplace where we as the market maker do not hold the funds at all? So when you come to Fibo today, you open a username, but like, you don't open an account with us. You don't transfer money to me. I never touch your money. I never touch your security. Like if I want to be an FTX, I technically cannot because we build it such that there is zero ability for us to do that. And the only way to do that is to do it in a very transparent way. And so that's the key benefit. It's the key challenge because this technology is not well, like not everybody has a MetaMask or a Coinbase wallet just yet. And people have a lot of fears about like what it actually means. And I have fears about some stuff. And so again, one of the things for us, we're building a fully regulated service. My goal is to be like the shining star of regulation when it comes to like working with the SEC and FINRA, working with these with my regulators to unlock this massive wealth generation technology to the US. Um, and it's really hard. And so we'll see if we made the wrong choice. When it comes to Polygon, we looked at Solana, we looked at Ethereum, and we looked at L2s. Arbitrum and all these guys were not there yet. We knew we wanted an EVM because of the sheer volume of code that was just written on top of it. And we knew we couldn't write on an L1 because of the costs. And so we ended up with like very few options, and Polygon was, they're just like so good. And so far it's been really awesome. We cover all the transaction costs. So when you come to us and you want to transact using USDC, we build the contracts in a different way such that you don't need to hold Matic. And so we cover everything. All you have to do is like, you want to invest $100, hold 100 USDC. That's it.
Yeah, no, that could probably lead to a few questions here. And actually, I did want to mention this. I was doing some research prior to the chat, and you have a great kind of facts section on your site, and make it very easy as far as abstracting away a lot of that kind of complexity that's usually there. So cool. So we actually have some questions. So we're gonna jump to that here in a little bit for the group Q&A part. Right before we do that, do you have any tips maybe for I would say for earlier stage marketplace founders? Just kind of in the early stages that you might want to share?
Yeah. And the one I'm experiencing right now, like what we're doing is the toughest. Like we all like we just like pain. That's kind of what we like. It's like there is nothing that's more difficult than ramping up a marketplace that I found, including raising kids. Like marketplace is harder. And so my biggest tip is just ask for help. People are really, really happy to help. I'm happy to help. And don't offer anything in exchange. Like why? It's fine. Just pay it forward, help other people when you know something, and it's fine because we're all in it together, and people are really generous. So just be nice, and it's going to work. That's one. I think second is there's I don't know if it's a fantasy, but like if somebody asks you, or if you ask yourself, like, what is the value of a marketplace to the demand side or the supply side, and you cannot clearly state one value prop, not that four, just one that's like way better than everybody else, than the rest of the other three, then you need to spend some more time talking to users. Like from what I've seen, is like offering products at scale, and specifically offering products in exchange for money, is very like, it's very helpful to have like one clear value proposition. And like as you grow, you might get more, and your average user base is going to start fracturing, and you're going to have like more standard deviation of your average user. And so, yeah, it makes sense to add a little bit more. But at the beginning, I'm like, well, what is this one thing that people will like rush towards your service and want it? It's true for any consumer product. It's like double true for marketplace because it's so hard, and convincing people early on is the toughest thing, right? Like I'm sure I'm struggling with this. Everybody's struggling with this. And so just clearly articulating what is this one thing is really important.
Those are really, really great tips. So cool. Hey, Henry, do you want to come on?
Yes, thank you, Udi. Thanks for the time, man. This has been super helpful. Two quick questions for you. First, as a early founder myself, it's, I resonate a lot with what you shared about how the environment has shifted so much, and what you did to fundraise 2 years ago maybe wouldn't work today. From your position, any guidance or recommendation you might give to an early founder as to, how to solution and how to resource against, the current climate that we're facing. And then the second is, I checked out your site. I'm curious as to how you picked the initial geography to target there in Ohio, and then how you plan to expand from there.
Okay, fundraising. I don't have a lot of experience, so I chose my careers like highly like known brands pre or post IPO. So I the only time I raised money was a year and a half ago, and we're going to do this in a couple months. I'll do an extension or something larger. I'll be smarter. At least what I hear today is two things. One, almost all the I think that what we're seeing is like investors are kind of angry at us for the last like 3-4 years. And we're like, oh, fine. Now we're gonna buy them cheap. Okay, good. And so if you find like these investors just shy away, like, okay, you can go. Money is a commodity. Like, fine, go. And so I would not waste time on something that just feels weird. The second piece is the real strong ones are looking for in a pre-seed, they're investing in you. And I hear it all the time, and I actually think it's true, is like the chances of your idea going from a pre-seed to a D round intact are 0. And so what they're looking for is they're looking for somebody that is smart, agile, like ruthless in execution, and I would also say disciplined when you present, when you interact with them. And so things around like what does it mean to be prepared, I think is a lot about like you don't need all the answers, but you need to have a framework. And then you need to be very clear that if they ask some stuff you don't know, you're like, great question. I do not know the answer. I'll get back to you. Summarize at the end of the meeting, like I have like 2 things I want to get back to you. I'll get back to you by this date. And that is an incredibly powerful method in how to work through like new questions and new things. And right, like if I were doing this and you would tell me this, I'm like, oh, cool, I can have a meaningful disagreement with this person in a very respectful, constructive way. Second question, why did we pick Ohio? I never bought real estate at scale, and we didn't know how to do it, myself and my head of operations. And so we were looking for friends that did it, and we found via like an intro, a company that helps retail investors buy property. And there were like good quality property. It's like C area. So I could pay $100,000 for a property. And what we wanted to do was buy multiple of them. So I didn't want to buy like one $500,000 property. I wanted to buy 5 $100,000 properties. Why? Because I get to learn 5 times, go back to velocity. And so we were looking at a few places, like Indianapolis was one, like all kind of like we wanted the red states and we wanted like C quality regions. And they were like, oh, we operate here. Here's what we've done. We bought 50 of them. Here's how we operate here. We have over 10 years of experience. So we went for that. And the city itself, like the property is actually very good investments. I would invest personally if I could. We decided we don't allow employees to do that. But like getting 8% cash on cash in a 5% interest rate environment is great. And a 4% is even better. And so that was the main reason to do it, and why we did all 5 in that area, just to be able to run really quickly through it.
Awesome. Those are great questions. I was actually going to ask on the initial kind of market selection too. So glad we covered that.
More random than you could imagine.
Yeah. Hey, Martin, do you want to come on?
Hey, Udi, thanks for all the tips. Really, really helpful. I had a quick question about the loyalty program and like incentives. When do you recommend like kicking those in? Because in our scenario, we're doing like a food marketplace for daily economical meals in Latin America, and it's like who to incentivize because they're used to using What's Up, but it's kind of like annoying to have five different food providers via What's Up. So we created this platform where we centralize. But how do you incentivize, or what can you create on or what advice can you give us?
Yeah. So referral is awesome. I would say it's worthwhile doing when you better understand your LTVs. I don't know how far are you into your endeavor, but like the same way as any paid growth play, like you need to run it such that there's some reasonable ratio between cost of acquisition and what you're expected to get from them. And so I would not recommend doing it too early on, at least a paid one. But I would, depending on how fast you can execute, I would recommend maybe exploring like non-monetary value things. And so I'll give you an example. If you have a waitlist, like a referral program that allows you to jump a waitlist is awesome, right? Like it costs you nothing, and it gives something for free that other people appreciate. If you're building, let's make it up. If you're building a marketplace for t-shirts, and the cost of a t-shirt is $1, but the customer values it at $15, giving a t-shirt is way better than giving $15. And so things like that, like try and find, with food, I'm sure there are interesting things you can think about. I wouldn't go directly to cash.
Makes sense.
Awesome. Hey, Carlina, do you want to come on? Try to get one last question in.
Yeah. So first off, thank you for doing this. It was really insightful. But I have a few questions. So I have a dual-sided marketplace to where we're growing a gig economy housekeeping side and then short-term vacation rentals like Airbnbs and VRBO. And we're entering into our third state right now. So I just have a question on the growth factor in this, and like when do you grow and continuously grow into, let's say, new states, new areas, new regions? Because I'm getting a lot of different conflicting feedback from when I ask this question on, slow growth, and some people are like rapid growth. And so from your experience in scaling and growing into different industries, what do you recommend on this? My idea is like, if we have the team, if we can scale rapidly into areas, it kind of sets us in front of everybody else because nobody else is doing like exactly what we're doing as far as a 100% automated platform.
Yeah, I would say it has to do, I'm going to cheat. So it has to do with your strategy. And I think that strategy has to be informed by your current cash flow and your burn rate. And so if you're telling me, I got tons of money in the bank, and my burn rate is good, I've got like 3 years. And if I go to 2 new states, I'm going to go down to 2 years, but I can be, I'm going to have like a better story to tell in a year. It's worthwhile doing, I think. If you tell me like it's like scaling fast is a risk to the business, always. And so if you're telling me, we still haven't figured out the first 2 states, and I want to run faster because I want to get to like more states before my competition. Like, are you sure? Like a state is like a fairly large area. Like just imagine the following thing: you don't do that, and you say, I just saturate 2 states. Like there is enough business there to be massive. And so I think that the most important question is like, what are you going to learn in your third state? Because and then try and say, I'm going to learn how to launch a state. Okay, is that really what you're learning? Maybe you're learning how to launch a city. And so can you do a city? Can you like learn how to launch a city that's like really close to the city you already have? Do you get like most of the learning over there? Because it is a very hyper-local business, what you're trying to do. And so are you chasing like ego and titles? I'm like, I'm in 3 states. I'm like, who cares? Right? And so it's all about like, what can you learn at the cheapest possible cost, which is your time, your mental health, and your money. If I were you, without knowing anything, I would say figure out 5 more cities in the states you have before you go somewhere else.
No, that's helpful. Thank you.
We once again really appreciate taking the time to join us here today. This is definitely a fun chat, and really cool to see what you're launching with Fibo. So big congrats on that. Actually, one last question for you, and I feel like this is going to be an interesting answer. But if you could go right back to before maybe you entered the world of marketplaces, what would you tell yourself about them specifically?
I love it. It's like, so there are very few people who understand marketplaces, I think. Like, just by doing what you're doing, you're like accelerating your LTV, either as a founder or as a hired gun, which is awesome. It's an exceptionally sought after skill set. It's just like really hard. Even at Lyft, where like we were working on this every day, you could see the number of people who truly understand what the marketplace is wasn't large. There weren't like tens of people who knew exactly what was going on over there. It was far less than this. So I think we're all choosing the right thing. It's really, really hard. We fail all the time. So just like keep on going. I have one favor, because we're doing growth. So can you check out my website? If you want to invest, that's great. If you just want to go through everything and just not invest, that's also good. And just help me understand what worked for you, what didn't. If you have any questions, like our FAQ pages that we're now just like starting to build it, link to website.
That was exactly how I was going to totally wrap things up, which is going to ask for, how we could keep up with you and check out more on Fibo. So
on LinkedIn, I write every day something. Some of it are smart things, some of it is not. Hopefully more signal than noise. And I also have a Substack, but I stopped writing a while ago. But I'm going to go back to it if you want to find it.
Well, we once again really appreciate it, and I'll include links here in the recap post. And I'll do one better. I'll actually do a post here in the community with a request for everyone to check out more on Fibo, and I'll try to maybe even do like a kind of screenshot, so a few there and some kind of steps on how to sign up and leave some constructive feedback maybe. So
cool, man.
And thanks everyone for the great questions.